Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, OpenAI to launch SearchGPT in challenge to Google, as well as that US economy grew at 2.8% rate in second quarter. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. But the first article to talk about is to do with SearchGPT and OpenAI. Now, the AI tech startup OpenAI has now stated that they'll be launching an online search tool which should act as a direct challenge to the popular Google search engine. This now opens up a whole new industry within the AI space as startups and large tech giants fight in the race to commercialize generative AI. Now, of course, this is a topic that we're covering all the time on this channel as we are amidst, the kind of AI revolution, as some people have, of course, termed it. Now, what we've seen come out of this AI revolution, well, ultimately it's been OpenAI kind of leading the way, and we're kind of returning to such a company, such a company in this article as well, with them now coming out with this new tool that they're going to introduce to the world and hopefully challenge Google, which of course, as I'm using right here, is a very important search browser to the world, one that is used, around the world, probably the most commonly used search engine as well. And now this seems to be, the thing that we've all been waiting for, it feels like, which was just, for OpenAI, for some tech startup, some key big tech startup to kind of come out and introduce their own, stance on AI into the search engine space. As we know that the likes of Google have, of course, started to incorporate the topic of AI into their search engine and their services in general. Gemini is the kind of generative AI model which they use. However, I think it's the hype surrounding OpenAI here that's really going to be the killer to Google, if there is any kind of killer, because ultimately OpenAI is of course carrying, it feels like, the AI revolution on its back. Their introduction of ChatGPT really brought people's eyes to the AI space in the first place. For many people, it's their first time truly interacting or utilizing AI technology in a very intentional manner. Previous to that, obviously, AI has been embedded within certain software and certain tools, for the past few years now, but ultimately it was kind of for the first time when ChatGPT was first introduced that people started using it intentionally, started using it as a tool to simplify, daily tasks, work tasks, and anything really that could be simplified using generative AI. And we know that this is all, this kind of, this introduction of generative AI, the new tools that are coming out as a result of it. This is all a part of the quest for AGI, the kind of quest for an all-powerful generative AI model, which of course can perform tasks far better than any human could ever. And that's the kind of key thing that all of these tech firms, all these tech giants such as Microsoft, such as Google, such as Meta, they're all going for this title. And ultimately, OpenAI and Microsoft have really been leading the way, especially on the publicity front. That's the kind of key thing to know. And it's with this publicity then that we have to start to kind of wonder what impact SearchGPT could have on the powerful name of Google. If you can kind of think back to when ChatGPT was first released, first introduced, many were already starting to worry for Google's, life around that time. And, we've covered that topic many times now, especially over the past week when we were talking about quarterly reports, because of course Google released their own quarterly report in which I believe they found, their profits slightly coming in. It was around target in comparison to other tech giants, which was certainly below target. But ultimately, what we did see from that quarterly report was that, ChatGPT and other, generative AI models had not had their impact that people expected on the likes of Google. And instead, Google still found its place within, making revenue or gaining revenues, making profits from its data services and cloud services and that kind of thing. Google is not just this search engine anymore, and instead, whilst it is a search engine, that allows it to offer all these different services, which actually ends up bringing a great deal of cash from. So definitely keep your eyes on this topic. It's obviously something that we're going to keep our eye on for the coming months, coming weeks, and it's probably going to be a key topic over the coming years even, as these are the kind of new tools, new things that are going to be coming out, especially from these large tech giants which are producing these AI generative models at the highest levels. And we're going to really start to see what they can do with these tools and how it's going to affect our lives as well, as maybe coming a year from now, 2 years from now, rather than utilizing Google or another search engine to create one of these videos, maybe I'll be using maybe I'll be using SearchGPT to find all the information that I need for articles and all of that. So we've got endless questions to answer, but ultimately we can just kind of presume. We can only kind of presume stuff and know the stuff that they're telling us at the moment, as of course people are on a waiting list currently to be able to use this service, with this new concept being termed SearchGPT by OpenAI. The service will only be available to a small group of users at the beginning, and since the announcement, a 10,000 person waiting list is being produced to enable those to test it. OpenAI made it clear that this product and service is distinct from ChatGPT, and instead of only offering one single answer, the service will provide a multitude of links and extra information following any individual query. This search engine has been developed with the feedback offered by publishers such as News Corp, the FT, and Axel Springer, all of which OpenAI recently signed deals with. They did, however, also note that they would eventually attempt to reintegrate the services offered by their AI search features into the well-known chatbot ChatGPT. So that's an interesting point to make there. This is all clearly in an attempt to challenge the well-established search engine giant Google, who has dominated the online search industry for the past 20 years. OpenAI and their new service does most certainly have a great deal of backing, however, with over $13 billion dollars in investments from Microsoft. It is now going to be very interesting to see how this battle between the two companies will affect the rise of generative AI and how this may transform the future of the two tech giants. So definitely keep your eyes on this topic. As I said, it's something I'm going to be coming back to, so don't worry too much about that. But whenever news comes out, you've got to be there straight away. So definitely look out for any news to do with AI or this new feature, SearchGPT. That's all to talk about on this article, though. Next article to talk about returns to the US economy, with the topic of growth and inflation once again being of great importance to cover. Now, the latest figures from the Bureau of Economic Analysis shows that the US economy has grown a significant 2.8% in Q2 of 2024. This provides further information on the status of the US economy and most certainly signals the continued consumer resilience of the American people despite high interest rates. Now, of course, this is you could say this is a surprise. This is a very large figure that shows that consumers are very resilient, but ultimately we've seen that US consumers have been more resilient than others around the world throughout this entire period of high interest rates. Surprisingly, they've just been able to cope with this high interest rate period remarkably better than what we've maybe seen over in Europe, especially within the Eurozone, which have certainly struggled with higher interest rates that have been implemented to try and combat inflation. So that's a kind of area which has struggled, whereas the US economy has obviously persevered greatly, and despite many warnings of potential recession or a long recession at that, we've really only seen the US economy grow through this period despite the high interest rates. Employment has remained strong, and ultimately whilst inflation has remained high, we would expect employment to kind of or unemployment to rise in kind of combat with that, or unemployment to stay low, pardon me, sorry about that, but ultimately we haven't seen that, and instead we've seen inflation stay at kind of record highs for periods of time, whilst unemployment has also remained low. So ultimately this is a very interesting topic indeed, and it'll be something that we'll definitely have to stay on top of as things do kind of heat up with regards to the election race, as well as we always have to kind of look at the US economy and consider maybe what the Fed is thinking and how that also might affect the political race, of course, between Trump and now Kamala Harris, as that's also affecting markets. But yeah, most certainly the US economy has remained very resilient throughout this period and just somehow has been able to persevere the high interest rates, high inflation, which high interest rates are meant to combat that inflation. We haven't seen that in the same way that maybe we've seen in Europe, but ultimately those high interest rates just aren't affecting employment in the same way that we'd usually expect. So it's very interesting to see, with the Fed obviously being amidst the process of considering cutting interest rates in the months coming. Such interest rates were initially brought higher in response to inflation following the pandemic, but now that inflation is falling, central banks are considering lowering rates. 2% is the Fed's inflation target, and currently US inflation is sitting around the 3% mark. Traders in the futures market reduced their bets slightly on the prospect of an interest rate cut following the data release, but despite that, 2 to 3 rate cuts are still expected. Data also showed that consumer spending had risen 2.3%, which is up from 1.5%. So very interesting economic figures there coming out of the Bureau of Economic Analysis, and obviously any new economic data that comes out next week, we'll be staying on top of that and keeping you updated. But of course, if anything comes out across the weekend or over the course of today, as we are receiving some very important figures on the economic calendar, which we'll come to near the end, so make sure you stay around so you can see that. But ultimately, because we are receiving such important figures, it is of course important to note that you do need to stay on top of that yourself as well. That's all to talk about on the articles, though. Next, talk about, like always, is the charts, where quite a bit is kind of taking place. Some very interesting things are kind of lining up and heating up. But to begin with, like always, we are starting on the Dow Jones, where, to be honest, not too much is happening. Some weird price action is taking place, however, but not clean price action that would kind of usually form a nice trade that we could make. But it does seem like the US 30 experienced a great deal of volatility yesterday as a result of that US, that kind of growth figure that we did receive from the US economy. So it does seem like, because we were able to see that consumers have remained very resilient, it seems like we saw the Dow Jones swing to the upside at first, but then kind of reclaimed that move to the upside back to the downside. So it's really hard to tell where things may go now for US 30. I think the key thing to always note, though, is of course that 78.60, that key Fibonacci retracement level, which is just on the downside there, which does line up with a very key liquidity zone, and obviously that 78.60 is always the level which we expect the largest bounce from. So if we do see price trend towards that area, I definitely think that's where we could start to visualize and start to conceptualize a potential trade, at least personally, and definitely keep your eyes on this asset at the moment, this indice at the moment, as of course the political race is also affecting the US 30. So much is obviously going on within the US, including of course the IT outage which caused this sell-off. And so there's so many things you have to stay up to date with that I just can't always cover all of it in one morning market briefing, which is why I always say whilst I do make this morning market briefing, definitely stay up to date during the days when you're trading or just looking at markets or whatever you do. Definitely stay up to date, as that is very important indeed. Next to talk about, though, is the dollar, which has remained within this range that seemingly formed over the past week or two. Now, I did say, to start off the week and ending off last week, that, it did seem like we were forming an inverse head and shoulders pattern, with this kind of marking the shoulder line and this marking the baseline, and then this marking the head of the head and shoulders pattern. And when we started to see price move back again to the upside and form what seemed like the baseline once again, and then potentially the shoulder, I did start to say that there was a significant chance that we were forming such a pattern. At the same time though, I did say that the way that price was moving, this choppy motion to the side was not indicative of a very significant inverse head and shoulders pattern. Instead, it possibly just showed that we were forming a range, and when we formed that so-called head in the head and shoulders pattern, what we had really seen is just a false breakout to the downside as a result of market volatility, where it does seem like some institutions were able to establish certain buy orders at those lower levels. So these are the kind of things that we have to always think about. We have to look at what we were previously thinking to better understand the future markets, what we might encounter in the future. So that is seemingly what is now forming on the dollar. And with the US inflation data that we're receiving today, as well as the US consumer sentiment figure, we've got lots in store for the dollar, it does feel like. So definitely keep your eyes on the dollar. Very interesting price action indeed. Next to talk about though is Euro USD, which is kind of sitting just on this liquidity zone. It's annoying obviously when price isn't making any kind of key or cool moves that we can kind of analyze and break down. But on the 4 hourly, really what we're just seeing is price holding within a liquidity zone. We're seeing price just struggle to find its way either to the upside or downside. As a result of that, it's hard to say whether we're going to see a move to the upside or downside, as I just said many times. Ultimately, though, maybe we could draw out some Fibonacci retracement levels just to start to kind of understand where price is sitting. So if we're expecting a swing to the upside, maybe if you're kind of looking at this as a retracement on the bullish side of things, we are currently sitting on that 78.60, so that's an important note to make. Whereas on the inverse, if we're kind of looking at potential retracement to come before bearish sell-off, that 50% and 61.80 do line up quite nicely with key areas of accumulation distribution. So maybe those are two levels which you should be looking at. Ultimately though, as I said many times now, that US inflation data that we're seeing today is really going to be the key thing moving any dollar related markets. So definitely listen out for that one, as things are very interesting, as I said earlier, for the US economy. Next to talk about though is pound yen, where to be honest, the most interesting price action is playing out. Over the past few months, past 2 months or so, we've really just seen this overwhelming bullish rally to the upside for pound yen, as the yen's really just struggled with its valuation, and despite the Bank of Japan's valuation attempts and that kind of thing, the way they've tried to fix the currency issues, ultimately we've just seen a continued devaluation in the yen, with the pound then just gaining momentum over over the yen. That's why we have seen this swing to the upside. Ultimately though, over the past few weeks, around mid-July, we did kind of start to see a reversal take place, with price selling off quite steeply following some news from the Bank of Japan, where price did tap this lower level of liquidity before kind of returning back to those levels that we've previously seen not too many days earlier. Ultimately though, it did seem like there was a momentum shift, a kind of target shift for pound yen, and instead we saw a sell-off take place once again, with price breaking below that key liquidity zone, kind of retracing back onto that zone once again, and then continuing that sell-off to the downside, which is really just what's taken place over the past week. As when we were talking about where pound yen was at the start of the week, we were looking around the 202.6 level, so a very high level in comparison to where we're now at, considering the sell-off that we've now experienced kind of took out all those gains that we saw over the period of June, it does seem like, and even going back to May. So that's how significant this sell-off really is. And it does seem like that sell-off over the course of yesterday found its bottom somewhat, with this price kind of reacting to some lower levels and then moving back again to the upside for a retracement. So definitely keep your eyes on pound yen. We're going to have to keep our eyes on it just to understand, where pound or yen could be going next, and definitely, mark out those kind of key fib levels, key liquidity zones to better understand where price could be moving next. Next talk about though is Bitcoin, if I can load it up, that is, which has reacted to that 78.60 that price was interacting with in yesterday's morning market briefing. So price has now tapped that 78.60 and is swinging to the upside from that level. It'll be interesting to see whether over the course of today we'll see that continued. And once again, of course, any macroeconomic data from the US or inflation data, economic growth, Fed news, anything like that massively affects Bitcoin because it is a hedge against the dollar. So definitely keep your eyes on Bitcoin and that US inflation data that we are receiving today, as both will be affecting more so the US inflation data will be affecting Bitcoin though. Next talk about though is gold, which has experienced a massive sell-off over the course of Thursday as price broke below this kind of bottom level, this support level, a liquidity zone that had formed around the 2,400 level. So price is now broken below that zone and is returned into this old range, this old period of accumulation and stagnation that did form not too long ago, near and around the 2,350 mark. So definitely keep your eyes on gold. Very interesting price action being made, and once again, gold will be massively affected by the inflation data we received today. Next talk about though is oil to end it off, which has found a bottom in the market after this decline that we've seen seemingly. But I say bottom, it more so just looks like a retracement that's taking place at the moment, but you're the one to judge that, of course. If we do draw out a Fibonacci retracement tool, we can see that price is currently interacting with that 38.20, so take that as you wish. That's all to talk about on the charts though. Lastly to talk about is the economic calendar. We're receiving quite a bit of economic data today. Firstly, we're receiving the French consumer confidence figure, followed by the Spanish unemployment rate figure, as well as the Chinese FDI figure, followed by that receiving the Italian business and consumer confidence figure. To end it off though, we are receiving the US inflation data and the US consumer sentiment figure. So lots of important data to listen out for, and obviously have a great weekend. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.